Welcome to Short View Trading, your morning market hit for Friday, 8th of October. What matters today for traders? Well, what a fascinating week it's been. Markets have been working hard to find a floor throughout this week, with the S&P 500 testing the level of 4260 to 4300 several times over the course of this past week. With that, yesterday, the market convincingly rallied through the top of the range it's been in since the 29th of September, as you can see on this chart in front of you now, this 10-day tick chart that shows you that range that's been in place with the lows, as I said, 4260 to 4300, up to around 4380, 4390. As I said yesterday, we broke convincingly out of that, and we're now holding above those levels. And as such, the key question is now, is this a resumption of the uptrend, or is this simply a relief rally that we're seeing in a multi-week downtrend? Well, the good news is on the macro side, the macro situation's been improving. As you can see in the 1-month US government bond yields in front of you now, their yields been easing as the debt ceiling issue's been coming off the table. 3 days ago, they peaked at 10 basis points. They're now down at 3 basis points. That's a sign the market believes that the politicians are getting their act together. Added to that, of course, we had a key day reversal in the oil price on Wednesday. That wasn't negated in yesterday's price action. And that suggests to us that this energy crisis is probably easing, and the offer from Putin to add more gas into European supplies. And with that news flow, we had a sharp move downwards in Wednesday in both gas and oil prices across most of the globe. All of that supports the idea that the macro news flow is improving, the stress is potentially easing, added to which our models remain very much on side. Whether you look at the put-to-call ratio we're putting up in front of you now, or indeed markets having been technically oversold on both the short and medium-term basis in recent days. But to see how we're playing this, to see the full suite of our short and medium-term models, our detailed explanation of how we see this market, as well as our specific recommendation on how to play the equity index future, please see today's daily rag available to subscribers via the website. Or if you're interested in a free trial, please click on the link below and enter your name and email address, and we'll send you the daily rag for free for 7 trading sessions. So what are we watching today? Well, absolutely, it's the big data point, the non-farm payrolls out at 1:30 p.m. London time, monthly job creation, wage inflation and unemployment rate, and lots of other detail about US employment. It's closely watched. It feeds into bond yields. Of course, it was disappointing last month at the start of September when we had the August data out. There was a big miss on payrolls. It'll be watched closely to see how it plays out from here. And of course, with bond yields backing up recently, this is an important data point into that trend that will feed into that trend. So that's it from us. That's your morning market hit for Friday, 8th of October. Thank you for listening. Please do subscribe to these videos on YouTube. Simply search under Short View Trading, or follow us on LinkedIn, Twitter and/or Facebook. Thank you for listening. Stay safe. Trade well.